Actually, it is written here, but you can tell me in simple words, what do you think about partnership?
Partnership means two or more person coming in and doing a business together.
You have joined from some other
Yeah,
device.
I'm joining. Yeah, I'm joining from my main device. No, because this device was not working. That's why I was late.
Okay.
I'm all right. You can keep going.
Okay. So you were saying about partnership.
Yeah, partnership means two or more person coming in and doing a business together. And they divide the share and share the losses in whatever agreement they have done.
Yes. So partnership, you can say that it is an agreement between two or more person. Two or more
Yeah.
person. You can see the definition here. There are some words written here that you have to focus on those words. So partnership is the relationship between persons, two or more persons who have agreed to share the profit of a business carried on by all or any of them acting for all. Okay. So first of all, if we go to these words, you will find it in features of partnership also, because feature comes from definition. So you can see that it will be written in features also. I'm showing it to you. Just 1 minute. Yes, you can see here features.
Yeah.
Yes. So I told you persons, two or more persons. What does it mean? It means that partnership cannot be started with one single person. Why? Because if it is one person who has started the business, then it is proprietorship, not partnership.
All
Okay.
right.
You need agreement. The second point is agreement. So if there is two or more person, then there should be an agreement, because if there is two or more person, then there will be some dispute in future. Always. You cannot avoid dispute when two or more person, because in simple friendship or relationship, people fight. Yes.
Yes.
So in business also, there can be any type of dispute which should be resolved to run the business smoothly. So that's why you need an agreement. Now, for agreement, it can be oral or written. Agreement can be oral or written. Now, can you tell me which one is better, do you think? Oral or
Obviously,
written?
the written one.
The written one. Why?
Yeah, what is it written? Yeah, it's written.
Can you tell me why? Why it is written?
Because for in during disputes in the future, we can easily see what is the solution we have written down, and it can be done, and we have all the proofs and evidences to show in front of the court.
Yes, the main thing is that written agreement can be presented as evidence. So oral, if it is oral, you cannot use it as evidence, because the person who is saying it may deny in future. So that's why oral agreement or oral wordings can be denied and it cannot be presented as evidence. That's why written is better.
Yeah.
Okay, so agreement can be written or oral. The third is a legal or lawful business. So actually, in whenever we say business in accounts, it is always legal business, not illegal one, because illegal business never fulfill the criteria of business transaction. Means you are taking one thing and you are giving one thing. That is the business. Yes.
Yeah.
But in illegal things, it never represent these type of transaction. It is always one-sided. So that's why whenever we say business, it means legal or lawful business. The fourth one is division of profit. Now, I have written only profit, but it also include loss. Okay,
Yes, obviously,
division
right.
profit and loss. Because if you are sharing the profit of the business, you should share the loss also. Then only you can become a partner. Otherwise, you may be an employee, you may be a banker for the company. So uh, all those person also take share in profit. When you pay salary to the employee, it is part of profit, but not the loss. It is part of profit. When you are paying interest to the bank, it is also part of profit, but not part of loss. That's why employee and the lender can never become a partner. So division of profit and loss is very important thing in partnership business. The fifth one is unlimited liability of partners. Unlimited liability means that until the liability is finished, you have to pay the money from whichever source you have. And if you don't have any assets in the business, then you have to pay from the personal assets. So that is called unlimited liability of partners. Okay.
Can you repeat the fifth one again?
Yes. Let me give you one example so that it will be clear. Okay. So first of all, let's say that there is a business A, B, C are partners. Their profit sharing ratio is equal. Now, business have total assets of 5 lakh and total liability of 10 lakh. Okay. Now, can you tell me that business will be able to pay all its liabilities?
Yeah, no, it can't.
No, because business don't have enough assets to pay all the liabilities. So there will be balance liability after all the assets is sold. There will be balance liability of 5 lakh.
I
Yes.
like. Yes.
Okay. Now, this liability cannot be paid from the assets of the business. So now A, B, and C has to pay from their personal assets. Generally, it is a loss. That's why it will be paid in profit sharing ratio. So they will pay this amount equally from their assets. But let's assume that C has only 1 lakh assets. C has only 1 lakh worth. So he will pay only 1 lakh because he cannot pay more than that. Yes or no?
His personal assets.
Yes, his personal asset is only 1 lakh. So he can only pay 1 lakh.
Yeah,
Still, there is total balance of
4
5 lakh
lakhs.
minus 1 lakh, so 4 lakh. Now A and B will pay 2 lakh and 2 lakh from their personal assets. Okay.
All right, all right.
So this is why I told you that if the assets of the business is not sufficient, then they have to pay from their personal assets. So liability exists until it is fully paid or there is no assets left. So in case of C, there is no assets left. That's why his liability is finished. Yes.
Yes.
But in case of A and B, they have sufficient assets. So that's why they have to pay full amount, 2 lakh and 2 lakh. So this is the two condition for unlimited liability until the liability is fully paid or there is no asset for payment purpose. So that's why it is called unlimited liability. The last point is carried on by all or any of them acting for all. So in business, in partnership business, there can be two, three, four, or more than that. Yes.
Yeah.
Maximum number of partners can be 50. Maximum number of partners can be 50. You have to remember this. So carried on by all or any of them acting for all means, let's assume there is 5 partners, total 5 partners. So any one of them can operate the business. Any two of them together can operate the business, or all of them combined can operate the business. So that's why it is written carried on by all or any of them acting for all. So it can be different combination and they can operate the business in any manner by 2%, by three, four, or all of them. So carried on by all or any of them acting for all. So this is the definition and feature of partnership. Now tell me if you have any confusion.
No, no, no confusion.
Okay. Okay, that's good. The next part is partnership deed. So you can see here, I told you that agreement can be oral or written. So partnership deed is a written agreement between partners. And actually it is prepared on a stamp paper. The stamp paper is actually non-judicial paper, which can be used as a proof. So it is prepared on a stamp paper and with certain value in it. Now, in this partnership deed, various things can be written. First of all, some basic things which is necessary to include is name of partner, date of starting the business, what is the business, and what will be the business place, like address of business and address of partners, identification of partners. These things is necessary, very important, because you have to include all the basic requirement of agreement. Then starts the rules, regulations, the rights and duties of partners. So there will be various type of content. You can see here content of partnership deed. It can include date of commencement of partnership, name and address of firm, name and address of partners, capital of partners, profit sharing ratio, interest of on capital and drawing, interest on loan, salary or commission of partners, rights and duties of partners, settlement of account at the time of retirement or death, settlement of dispute, other matters. So actually, these things can be included, and there can be more to the agreement, not only this. This is the list is inclusive. You can include more items in the list. So this is the content of partnership deed. You want to write this?
I already have this.
You have written the definition, features.
No, I have all of this in my. I'm getting this all of this in my notebook because these are not so detailed. These are just the toppers, so I have this in my notebook.
Can you repeat what you just said?
No, I have this in my notebook. The beginning part of this partnership deal.
Okay,
So
no,
like
you said that some of the toppers part you have said in your previous sentence.
No, I'm saying that these are not deeper ones, right? These are just the beginning part.
Yes, these are the basic definition part. So there
Yeah,
is
yeah,
no.
this I have. This basic parts I have in my notebook.
Okay.
That's what I'm
Okay.
saying. So if you go deeper, I'm going to take notes of this.
Actually, the deeper thing is explanation. Okay. The definition, features, and this partnership deed, these are the wordings only. There is no deep details in here. Deeper means when we discuss the topic, then we go in detail. Like when I was explaining, I told you about the unlimited liability of partner. Yes,
Yeah.
that is deep when we go in detail. So explanation and discussion is in detail, in deep, but the definitions, basic part, the theory part is like this.
All right.
Okay.
We have some calculations, right? With the profit sharing ratio calculation.
Yes. Yes.
All right.
Everything will come step by step. Okay.
All right.
Okay. So now these are the provisions applicable in absence of partnership deed or if partnership deed is silent on any matter. There is two situations. One, when you don't have any partnership deed, then also these provisions will be applicable. Or you have partnership deed, but that matter is not included in your partnership deed. Okay. So there is two situation. One, when you don't have any partnership deed, or the second, when the specific matter is not included in your partnership deed, then these provisions of partnership act will be applicable. Okay. Now the question is, what is partnership act? Do you know what is partnership act?
No.
Okay. So if you see the definition, I have written Partnership Act here. Section 4 of the Indian Partnership Act 1932. So the simple thing is when in every country there is government and they have their own set of rules to run the country and special matters. Yes. So every country has their own set of rules for different things. So for partnership business, there is a Partnership Act 1932. 1932 means it is applicable from that time. It is uh, prepared at that time. So that's why it is Partnership Act 1932. There are different sections, rules, regulations in the Act, which is written so that people can follow these rules in partnership business.
Okay. Yes, yes. Keep going.
Okay, actually, you said something in between. That's why I stopped.
I actually taught my mother section.
Okay, so there are different set of rules in Partnership Act also. There is rules, regulations, which is prepared so that people can follow while doing the business of partnership. Okay, so that's why when there is no provisions included in partnership deed, then we have to follow these rules. You can see that the first item is profit sharing ratio. So if there is no agreement between partner about profit sharing ratio and there is some dispute, in that case, profit sharing ratio will be equal. Okay. So if there is dispute and there is no partnership deed, you will go to the court. Yes or no?
Yes.
So court will decide that in Partnership Act, it is written that if there is no partnership deed, it will be equal. So you have to divide your profit sharing ratio in equal.
All right.
Okay. The second is interest on capital. Interest on capital is not uh, paid to the partners. Why? Because it is their duty to invest money into the business. If you are starting a business, then it is your duty to invest money into the business.
All
Yes.
right.
So you cannot demand any return while fulfilling your duty. Let's assume one example for this matter. Let's say that your parent asked you to do some work. Okay.
All right.
Let's say that they have asked you for one glass of water. Okay. And in return, you are saying that I should get at least 5 to 10 rupees for this work.
All right.
Is it good?
No, it's not good.
Yes, it is not good because it is your duty to give the glass of water that they have asked to them. Yes.
Yes.
And you cannot ask for money in return. So that's
Yeah.
why all the partners needs to invest money into the business. So they cannot ask any return from investing capital. So that is why interest on capital is not given to the partners if it is not written in partnership deed. Okay.
All right.
So it is important to understand that if it is not written in partnership deed, then only it will not be paid. If it is already written, then we have to pay. Means business has to pay the interest on capital. Okay.
All right.
Okay. The same thing. Next is interest on drawing. Interest on drawing means when a partner withdraw money from the business and obviously they have some household use, and if they are not doing any other work, say, so where they will get money from? So that's
From
why they withdraw money from the business on regular basis so that they can run their house. And if they are withdrawing money from the business, then we will not charge any interest on that. Okay. It is their right to withdraw money from the business because they are making profit and they have right to withdraw the profit from the business. So that's why interest on drawing is not charged from the partners. The next is interest on partners loan. Now, loan, apart from capital, actually, partner have already invested money into the business in form of capital. Now they are also giving loan to the firm. Okay,
all right.
if firm needs more money, then they are giving extra fund, and for that fund they can charge interest.
All right.
Okay, and if interest rate is not written in agreement, then it will be 6% per annum.
All right.
So interest on partners loan. The next is salary or commission of partners. So it is also not paid to the partner. Now tell me, I think that these topics you have already studied. Yes, you told me.
Yeah.
Okay. So up to which part you have completed?
We have completed a little bit more than this one.
Okay.
Uh, just the like we tried some questions which I didn't quite understand. The there's some partners A, B, C, and they have a different PSR.
Profit sharing ratio.
They have different ratios, and we're gonna check how much each is gonna get.
Yes, that is
Yeah,
called profit and loss appropriation account.
yeah, something like that. So I couldn't quite understand that one.
Okay. So you have already studied the theory part, but okay, it will be good if we continue with the topic in sequence. So this is the provisions applicable in absence of partnership deed. There are some other provisions also, like a minor cannot be a partner. You have studied that.
Yeah, wait, a minor, yeah, yeah, a little bit of that one, yes.
Can you tell me what is that? A minor part.
You have to be a minimum age in order to be a partner.
Okay.
Below the age is not allowed.
18 years.
Yeah, 18 years and plus.
And that's it.
Yeah, not
Okay.
much.
Okay. So these are the provisions. Other important provisions means the main provisions we have already discussed now. So these are other important provisions. The first one is a minor cannot be a partner, but with the consent of all the partners, he may be admitted for the benefit of partnership business. Sometime, for example purpose, Sometimes you have seen that some child artist, you can say, the small actually when they are actors or some players of age less than 18. Okay, so they are famous and we can admit them as a partner for benefit of partnership business. Yes.
All right.
Also, we can give them share in profit, not loss. Okay.
All right.
Okay. So a minor cannot be a partner. Simply, if someone is asking that a minor can be a partner or not, then you have to say no, a minor cannot be a partner. But if they are asking in detail, then you can say that with the consent of all the partners, for the benefit of partnership business, he can be admitted as a partner.
All right. All right.
The next is a person may be admitted as a partner either by consent of all existing partner or as per express agreement. Now, what does it mean? It means that if you want to join a partnership firm, then you have to take permission of all the partners. If there is four partner, then you have to take permission from all four partners. If there is six partner, then you have to take permission of all six partners. It
Express
not
agreement meaning partnership deed, right?
yes.
Yeah. Okay.
Okay, so you have to take permission of all the partners. Now, sometime student ask about this. So, what about if there is five partner and we have taken permission of four partners, not one? Then
They can't be admitted.
yes, then they cannot be admitted into the partnership firm because in partnership business there is no case of majority or minority. Okay, you have to take permission of all the persons, all the partners. You cannot say that I have taken permission from four of them, so one will be okay. If one is denying the admission, then it is okay. No, it is not, because you have to take permission of all the partners.
Yeah.
This
Well,
is
everyone is
applicable.
investing.
Yes.
Everyone is investing in the business, so
Yes, so you have to take permission of all.
yeah.
The next is, this is applicable in case of retirement also. Means if one partner is leaving the firm, then he has to take permission of all the partners. Or if there is anything written in agreement, partnership deed, then he can follow those uh, process and procedure and
Wait.
leave.
Even for retirement, we have to take consent of all the partners.
Yes.
So if an organization is going and I am a part of it, if I want to retire myself, I have to take consent from all the partners.
Yes.
Okay. Okay, that's weird.
uh, it is strange.
Yeah, it's really strange.
Okay, can you tell me why?
Because like I no longer want to continue. So if another person says no, you have to stay in it. So it's up to my wish. So if I want to stay, I'm gonna stay, or else I'm just gonna leave.
Yes. So that's why agreement comes into the place, into the business. So you can see the detail here. A person may retire from partnership firm, the point number four, firm with the consent of all partners or as per express agreement. If anything is written in agreement, then you have to follow those procedure. You don't have to take permission from all the partners. If you follow the procedure, that is also fine. Then you can retire.
All right, all right, okay. So during the partnership deed, you have to mention that if I want to
What is the
retire.
procedure to retire? Yes,
So what? So in that way, I don't have to take consent from everyone.
yes.
Okay, all right, all right.
So that's why partnership deed is very important. The third point is registration of firm is optional, means you don't have to necessarily register your firm with the government, because that is not necessary. It is up to you that you want to make registration or not. Okay.
All right.
So these are other important provisions. These are the basically the main theory part. After these, we will go in detail for practical parts. These are the simple basic theory. Okay.
All
So do
right.
you have any doubt in any of these topic?
No, no.
Okay. So you understand all these. Actually, you have already studied these before. So I think that's why there is no confusion.
Yeah, yeah. Uh,
Okay, so this is profit and loss appropriation account. What you have just told me that you have problem in understanding it. Yes?
yeah, yeah,
Okay, you can see the format.
yeah.
Okay, so basically the first item on the debit or credit side, both side, is to profit and loss account or buy profit and loss account. Okay, so can you tell me what is it, the first item?
The first items we're gonna be writing is the buy profit and loss account, the profit, and then the buy interest on drawings.
No, no. I'm
After,
not asking for second item. I'm just asking that what is it, the first item, from where it is coming.
okay, it's the profit and loss account. It's a loss, so the loss should be written over there.
Okay. If you remember the financial statement, there is a profit and loss account we prepare. And
Yeah,
in that profit and loss account, the balance is called net profit or net loss.
yeah,
So in proprietorship business, that is net profit or net loss. It is directly added to the capital account because there is one person who is the owner. Yes.
yeah.
But in partnership business, there is three or four or many more person. So we have to distribute this profit between all the partners. So that's why we take the profit from profit and loss account, and it is directly not added to the balance sheet. So we take the profit, we write it in this account and distribute it between all the partners. Then we can know that every partner is getting this much amount. After we have calculated the share of each partner, then we can add the profit share in their respective capital account. Okay.
All right, all right.
So this account is prepared for distribution of profit.
Okay,
So if you see here, it is an extension of profit and loss account.
so
I have
we'll be
written,
having trading account, profit and loss account, and then the profit and loss appropriation account.
yes, in financial statement, we have studied trading account, then profit and loss account, and then balance sheet.
So after
So
the profit and loss, we'll have just appropriation account, and then we're gonna have balance sheet.
yes. So now we have to prepare appropriation account.
All right,
And after appropriation account, we have to prepare capital account. There is two additional account we have to prepare.
all right, all right.
And after preparation of capital account, you can prepare balance sheet. So that's why it is written. It is an extension of profit and loss because we take balance from this account and write it here in appropriation account. So that's why it is an extension of profit and loss account. It is prepared to show the appropriation. Appropriation means distribution of profit. Okay.
Yeah, all right, all right.
It is credited with profit and interest on drawing and debited with interest on capital, salary or commission and transfer to reserve. So in the it is also nominal account because it is extension of profit and loss account. So all
Uh,
the profit and income is written on credit side, all the loss and expenses is written on the debit side. So
So
that's why,
reserve meaning retained earning, right?
yes, retained earning you can say. So we save some money for the future purpose. There is a chapter in
Yeah,
11th called
yeah,
provision and reserve.
yeah, yeah. I've studied that.
Yes. So that is the reserve.
All
So
right, all right.
transfer to reserve means that we are saving some money for any emergency purpose, any future purpose. So that's why to reserve account. So all the debit items are expenses. All the credit items, you can see interest on drawing is the only single item on the credit side. So it is income for the company. Now, after writing all these items, we have to calculate the balance, which is here. Now, balance can be either on the debit side or on the credit side. So, whatever the balance, it will be distributed in partners in their profit sharing ratio.
So first we get the balance, and then from the balance we distribute it towards the partners.
Yes. So, first we will calculate the balance. Now, the thing is how we will calculate the balance. The formula is simple, as we have done in ledger. You have to calculate total of debit and total of credit side. You have to calculate total of debit side and total of credit side. You have to compare these two. Whichever is higher will be written on both sides.
Okay.
So we will add these two, we will add these four, and then we will compare the total, whichever is higher. Assume this, that total of debit side is 15,000 and total of credit side is 18,000. Okay.
All right.
So which one is higher?
Obviously the credit side.
The credit side. So it will be 18,000 here and 18,000 here. Whichever is higher will be written on both sides.
All right.
Now, after this, we have to calculate the balance. So for calculating balance, you have to deduct the total of lower side from the higher side. Okay.
Can you repeat that? What like?
You have to deduct the total of lower side from the total of higher side.
Okay, so if it's 15, okay, so the balance here will be 3,000.
Yes, balance will be 3,000. Very good. Balance will be 3,000. 18,000 minus 15,000, it will be 3,000, and it
And
will be distributed in this ratio.
yeah, all right, all right.
So let's say the ratio is 3 is to 2 is to 1. So it will
Three.
be 1,500 for A, 900 for B, and 600 for C.
Okay, all right, all right.
Understood?
Yes, yes.
Okay. Actually, I have just given the introduction of profit and loss appropriation account. Until we have solved some portion of it, then it will be easy for you, because it is very easy part. It is not a difficult one in this chapter. Difficult one is yet to come. So it will be very easy for you to understand. We will discuss the question in our next class. So if you have any doubt up to this topic point, then you can ask question.
No, 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 any doubt. I've already asked all the doubts.
Okay. So if you don't have any question, then that's all for today. Thank you.
Thank you. Bye. Have a
Bye.
great day.